experts to speak to us about the quality of the stock market recovery. Chirag Negandhi, Managing Director and Co-Head of Research at Axis Capital, joins us now from the Axis Capital conference. Chirag, good afternoon. Thank you very much for finding time for us between your conferences. What is the sense you're getting from the various domestic and foreign participants? Are you getting a sense that that 7450 level has been just averted for the moment? We will revisit it soon?
Hi Lata, thanks for having me on. Well, as you're aware, this is the 9th edition of our conference, and we've actually played this conference around the entire digital theme and the impact of digitization and going digital on across sectors. So we've had a private bank come and talk about how digitization helps them, and then we've had a media content maker actually talking about their plans of having an SVOD platform. We have a few panels, including the infrastructure and consumption panel, talking about digitization and the impact on them. So, and as far as investors are concerned, we have about 180 investors from across India and over the world. And while we're not talking Nifty levels, the basic understanding here is that a lot of the froth has been cleansed. There were expectations around this government when they first came into power. Some of them more unrealistic, primarily because they didn't have a magic wand. That post the Bihar elections have tempered down quite a bit, and what you're now seeing is a market that will move back to being driven by earnings, as well as what happens in the global environment.
But don't you think even those earnings are elusive? Purely because of earnings, even assuming the entire Modi premium has been wiped out, which some may debate, is there still any scope for these markets, for the rally to have legs?
Well, we don't look at specifically at indices just because there are PSU stocks and there are metal stocks and that which have some pain points there. But if you look at some of the other names in that, the quality names in that, you have a clear visibility that they've had this quarter, for example, significant margin improvement, even though that was because of lower commodity prices. As and when top line growth does come in, you'll see the operating leverage kick in, and therefore earnings growing multifold.
Okay. Chirag, hi, good afternoon. Infosys is one of the companies presenting in your conference, Mr. Praveen Rao, and it's quite interesting that we have seen quite a bit of underperformance from IT sector today. What do you think is happening here, and what's your house call on maybe not stock specific names, but on frontline IT?
Well, we remain bullish on the IT space. Actually, your day-to-day movements may be because of where the rupee is currently versus where it was a couple of days back. But as a structural business, we are confident about the recovery in the US, and therefore just how the IT space plays out. I can't discuss specific stocks, but we like the frontline IT names.
Okay, and since we're talking about earnings, Chirag, at what stage do you see the overall earnings picking up? I know you said that from index point of view, it doesn't make too much sense because you have metals and a couple of other companies. But for core earnings to pick up, do you have any visibility on that?
Yeah. So it's definitely been delayed. We all of us expected that this year, for example, would have been a 10 to 12% kind of earnings growth. We didn't see that across the broader index, as well as in specific companies have been a disappointment. The last quarter was a disappointment. But I think with the government spend coming in, a lot of the names that one was now hoping that would benefit from all of that will start seeing this over the next 2 quarters.
Okay.
So we expect FY17 to be far better.
Okay, what would be the pockets that you would buy first? You spoke about selective IT stocks. Which might lead the growth, Nifty or outside Nifty?
No, so if you're looking at outside of IT as well, we actually like some of the private bank space. We like some of the infrastructure names, given, like I said, the spend that the government is likely to do in that space. We're already seeing some movement coming in the road sector. We like some of the media names, that are being especially benefiting from the entire, digitization bit. So yeah, in pockets across sectors, there are quite a few names. We like some cement names as well. Auto, we've liked Ashok Leyland for a long time. We continue to like it even from here. So, It's been across sectors where there are winners, which I think the market has now moved to being a stock pickers market in any case, and that's really where we are focusing as well.
Okay, that's interesting because you have Maruti also presenting in your conference, and that's really been one of the stocks of the year, Chirag. Do you stay bullish on some of these names after the kind of surge that we have seen? Maruti, TVS, couple of other consumption plays?
Well, we continue to like Maruti and Ashok Leyland in the auto space, and we're overall, getting more and more comfortable with the urban consumption spend. We actually have a consumption panel that's ongoing while we're talking, and that's really what the big discussion is, that the spend has really moved from rural consumption to now coming into the urban areas, and that's the likes of Maruti and the discretionary spend guys are the ones benefiting.
Okay. Are you all discussing drug stocks in any fashion? There's no guest from that sector in your conference, but does that still remain an interesting area?
So, well, we have some healthcare names. We have Dr. Devi Shetty of Narayan Hrudayalaya, who's going to be talking about his model of, so I mean so we don't have the pharma as you know them, but we do have the healthcare names. And that's actually seen a great amount of interest because of, he's pretty much running a private healthcare institution, almost pricing it at government costs, and thereby, creating great value actually.
The most hated sector, metal is well represented in your conference. You have Vedanta, you have GSW Steel. Do you think the risk reward is now favorable? Most of the bad news is priced in with the kind of collapse that we have seen in stock prices?
I think the metals is much lesser to do with the individual companies as much as it is to do with just the global scenario around it. And the outlook really on the metal, globally also remains muted. So it's tough to, I mean, you might get a trade or two there, but it's as a structural call that we're not for it right now.
Okay, and what about public sector banks? No representation in your conference. Is it showing some signs? I mean, at least Moody's and Fitch thought that the worst is over. Any buys over there?
Well, we have a couple of public sector banks, so it's not, I mean, there's some presenting in our main track as well. But our preference has been the private sector. I think, some of the steps that the government is taking could see the bottoming out of the public sector as well. I think one of the, the Uday scheme that they've done is a huge beneficiary ultimately for the banking space as well, along with the power sector. So, I mean, again, it has to be stock specific. Don't want to paint this with a broad brush of just public sector banks. But yeah, the preference is towards private sector right now.
Okay, just a word on the investment scenario right now, since, you've met so many investors as well. This year has been bad for equity investments from FI point of view.
Sure.
Any feedback on what do we need to do in order to get some of those flows back? This year has been much more muted. Equity inflows, I'm not talking about debt, compared to last year.
Yeah. So, I don't think it's an India only problem. This has been an emerging market sell-off, which was a risk-off kind of trade that people took. And India kind of, has kind of held out compared to most other emerging markets in that sense. The theme really for us is that because of the reach that banking is now going to get owing to going digital, you're seeing a lot more, through SIPs and otherwise, a lot more of the Indian savings coming into the equity markets as well. So the way we see this is over the next 3 to 5 years, it'll be the domestic money that really fuels the capital markets and reduce our dependence over time on the FI money by itself.
Oh, yes.
But yeah, I don't think people are, are extremely bearish on India or any of that. It's just that it's a broad stroke of emerging markets being sold off, and people are, at least at our conference, when they're coming in, they're trying to look for good ideas to be able to invest in.
Yes, bad company at this point in time, I guess. Thank you very much, Chirag, for joining us with your thoughts today, and have a successful conference out.